Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, events, technicals, and fundamentals that affect these markets. Miles, take it away, buddy.
Sure, let's take a little look here just at what the precious metals have done over the last week and maybe one or two other charts, Rob, as we progress through the show. So first little snapshot at gold, up about 1.5% from our recording last week. But man, that's not really telling the whole story.
No.
That's about $40, but we did have that great little inter-week price hit at 27.50 that we may be pulling back from. So we'll dig into gold price here in a second. Silver, not to be outdone, up 6.5% at the moment. And at one point on Tuesday, it was up over 10% since our recording last week. So
In a
a
week.
massive move.
Yeah.
Massive move on silver. That's Thursday to Tuesday. We saw a 10% move. Platinum, about 2.25. Still hovering right around that $1,000 mark per ounce on platinum. I don't know where the world's platinum supply is coming from, but apparently it's still coming because that price ain't moving. And palladium up about 3.5% and hovering just above 1,000. So still looking pretty close 1-to-1 between platinum and palladium, and staggering discount compared to gold. So where do we want to start? I know there's some other things we want to talk about today, but as far as the precious metals go, is there anything specific you think we should take a look at?
Well, you know, I've been watching silver, and it just has to get above 36. So I pulled over to the short term on copper. And over the last month, it looked like copper was trending down. But Miles, when you pulled out the chart and went back year to date and just even a full year, it does look like copper is having an upper compression. Why don't you pull that chart? Because I think copper is going to propel silver over 36. And you know I'm not a silver bug, but you've got to look at the chart. Copper is very compelling.
Well, starting with that silver price, we're hoping it pushes it into. I will point out that silver did hit the highest price in 12 years this week. This is going back to September 2012, where silver was making those bounces down off that $50 high. So we're looking at some pretty significant, that $35, $36 range, like you said, that once we see us move into that range, it could be and probably will be off to the races. Gold, on the other hand, already left the blocks.
Yeah.
Gold's been running for a while now. Silver is starting to show some legs, which is great, and it's just getting into its first couple of hurdles. But copper is an interesting one, and you had brought that up when we were talking before recording, and I kind of started to zoom my chart out a little bit. And I start thinking, you know, this kind of looks familiar, Rob. This
Looks like
activity
gold.
we've had. Yeah, this activity we've had over the last couple of years is starting to look semi-familiar. Now, we got the 2020 run-up, just like gold. We got a couple years worth of pretty volatile corrections back and forth. I mean, you're talking about copper between 2022 highs at around $5 and 2022 lows at just above $3. You're talking a significant 30-40% swing up and down for the last couple of years. But what copper's doing that gold also did, and you just mentioned this, is it looks to be compressing to the upwards ends of that range, because copper just put in an all-time high back in May. We had a correction back down, and it seems to be climbing again since then. So at least in the short term, it is arguable that copper is declining, but it's getting real close to a short-term breakout to the upside. And if we see that sooner than later, there's not a lot sitting above copper that's going to rein that price in. So my question then becomes, what happens in a world where copper is $10? Or even 6 or 7.
Dr. Copper pulls silver with it, you know, because we look at the relationship of gold to silver, but, you know, we've been in the 80, 90 to 1 silver to gold ratio for so long. You got to look at copper, and Dr. Copper is telling a completely different story.
Yeah, Rob, so if we look at the same kind of pattern that might be building with copper and we compare this to what we saw in gold, you can see here where gold is compressing up and we finally see this breakout period Well, now we're at the end of about a 35% run in gold in a very short period of time. So if we see something comparable in copper, you're talking, a $7 copper price versus $3 just a couple years ago. So the cost of production and cost of living globally is obviously going to come back to that. There's a reason you keep calling copper Dr. Copper. It really is the canary in the coal mine that gives you the idea of what we're looking at on a global economic and production scale. So I'm concerned. I'm glad you brought up copper. We do get hyper fixated on the precious metals here. And sometimes, to get out of our ivory or our golden tower and get down into the mines where the work is actually being done, because copper's where the work's being done and copper's telling a story.
It is, and silver primarily comes as a byproduct of copper mining. So that's one of the reasons why they are inexorably linked. Instead of having a opportunity with 100-to-1 maybe ratio silver to gold, I think we're going the other way. I'm going to amend what I said a few weeks ago and say, look out for silver.
I think you might be right. I don't know if I'm quite on board yet, but we're looking at the gold-silver ratio pushing from a pretty recent near 90 all the way back down to just barely above 80. So we've seen a pretty strong move. Obviously, this type of week that silver has had, a 10% move in, 3 trading days? Thursday, Friday, Monday. Name another time, right? I have no clue. I don't even know what to compare that to. And then seeing the same type of action taking place. Let's say we're looking at a silver breakout from here in a comparable move, like a 35% move, like what we saw gold do when it broke out. And that's making the assumption gold's done for the time being. Like, I'm just talking about where gold is now at 27.50. It could keep going. But let's say copper does the same thing that we've thus far seen with gold. That takes copper to $7. Let's say silver does the same thing from where we're looking at potential breakout ceilings now, which is about the same place that we're at now, between $30 and $32. Well, a 35% move takes us up to $45. Well, that's not too far off the previous all-time highs. So we've now made up all of that ground in silver. We're at a 35%, 40% increase above the previous all-time highs in gold. And copper is 2 to 3 times the price it was a couple years ago. Well, guess what else happens when that does? Timber's going to go up. Oil's going to go up. All the costs of production things that we have to deal with are starting to go up. And I don't know how this gets cleaner, cheaper, or better at this point.
Well, it does look like the people that have been pounding the silver drum for many years could finally see the move that they've been hoping for. Let's keep our fingers and toes crossed. And it's not inconceivable that gold could take a run to 3,000 and silver can fade. And that puts us in another position in a ratio trade where we can unwind some of our gold positions and go back to silver. But I think we're going the other way. I think silver is going to take a breath here, like with what we've seen today in both gold and silver. And then I think we're off to the races, but we'll see.
So the question, of course, then to me becomes, okay, well, for those of us that maybe are sitting in our retirement accounts or 401ks that are at best parked in some sort of S&P ETF, at worst, sitting in some sort of diversified bond fund, crossing your fingers that the rates are going up. So hopefully your 401k is somewhere in between those two extremes. But let's start at the conservative extreme, because I think it's worth taking a look at the S&P as well this week, because we're talking about an inflation-driven market push. And obviously that's going to cause a rising tide raises all ships, right? So we're seeing the S&P continue to hold on up over almost 5,900 this past week, and I think it's worth looking at. There's a couple time frames in here, and I was thinking about this earlier. The S&P from the high this past week could lose 15% of its current nominal price, and by, I would argue, pretty much all charting measures, still be considered in a staggeringly strong bull market. So that to me is kind of a frightening amount of volatility. that you could see what under normal circumstances would be considered recessionary, potentially depressionary level declines, 15, 20% declines over a significant period of time. So something like that could last 6 months. See 6 months of declining equity market down 15, 20% by the time it's all said and done. And from someone like me who's just going to zoom the chart back out about 5 years instead of just the last 6 months, I'm going to go, man, that's a really healthy bull market that we're in the middle of. So there has been so much unearned growth across the board. And I'll take some of that on the precious metals side as well. Because last time I checked, gold isn't any more valuable than it was 6 months ago. It's just the dollar price is higher. And I don't think the S&P is more valuable either. I'm pretty sure the companies on the S&P are not any better off than they were 6 months ago. But man, inflation has a push. So yeah, I'm looking at potentially a pretty significant decline in the S&P, which from my perspective isn't a panic, it's a potential opportunity. Well, that's all I got for charts this week, Rob. That's what's been on my mind. Thanks for bringing up the copper thing. I hadn't taken a look at that, so I'm glad we got to chat about that.
Yeah, that was something that I really wanted to focus on. But I think that'll do it today for Golden Rule Radio. Miles, take us out.
Well, as always, if you liked what you heard, you know where the YouTube buttons are. But honestly, better yet, why not head on over to our website? You can find more info at McIlvaney.com. We're also on Twitter at ICA Gold and Facebook at McIlvaney Financial. And best of all, if you'd like to chat with one of us here at McIlvaney Precious Metals about your personal portfolio, we'd certainly love to. You can give us a call anytime at 800-525-9556. Thanks again. We hope you have a great week.